So you can just start it. I'll walk in a second. Okay. Hey, we ready? All right, everybody. Happy Tuesday, everyone. Welcome. Glad to have you with us today. Thank you to Nate for firing up the old streaming server so that we could do a live video today. This is MetaTrader. On the screen here is my indicator Knoxville Divergence, and I'm going to show you some tricks and tools that I used a few years ago that I was reminded about by my friend Serge in London this past weekend. So I'm going to fire up the charts here. I'm going to delete a Fibonacci retracement here, and I'm going to show you what this is all about. Delete that. Oh yeah, come on. You can delete. There we go. All right, so on the chart in front of us right here is just a basic British pound Japanese yen chart on MetaTrader. And what we've got here are red lines above candles and then some green lines below the bars or candles. This is a 1 hour chart. It doesn't really matter what time frame you're looking at or what time frame you want to look at. It doesn't really make too much of a difference. However, what I want to do today is just kind of look back and show you these divergences, and then I want to add something to it. I want to add Fibonacci to it. And I'm not really a huge fan of Fibonacci sequences, but I think you're going to see something here that you might really like. And today, Nate, since we had some streaming problems, why don't we give away an iPad during the broadcast? All right, does that make anybody excited? So raise your hand or say yes or type yes in the chat box if that sounds interesting to you. We're going to cover divergence. We're going to add some Fibonacci to it. And then I think at the end of the broadcast, we should give away an iPad to someone who says something particularly enjoyable. Or, you know, whatever. So ask some questions, say hello, let us know where you're from. For those of you that don't know me, my name is Rob Booker. Some of you just recently downloaded this Knoxville Divergence indicator. Let's see here. All right, so this Knoxville Divergence indicator shows up as green lines underneath the bars or candles, or red lines above them. Now, I know there's a glare on the screen from the light, and that happens whenever you're using this monitor that we stole from NASA headquarters. Nate actually had to have a backpack, and it was just basically we wouldn't fit through any doors or anything. So we had to go through the air shaft, and it was a total Mission Impossible type of situation. Anyway, these lines below candles and above candles appear when the momentum with which price is moving has been reduced. So, for example, many of you already know this. This is bullish divergence. This means that price is moving down. However, an oscillator or a rate of momentum is increasing. That's an early warning sign that price is going to reverse and come back up. And of course, it's not a guarantee, and no indicator is ever a guarantee. So if we scroll back on the charts here a little bit, oh, here's another nice example right here. Wow, this drawing tool stuff, Nate, is working perfectly today. I mean, imagine that. So right here, a red line appears above price. Now, that's kind of small here on the screen, but this red line is an early warning sign that price is going to fall. Now, why is it an early warning sign that price is going to fall? It's an early warning sign because price is rising. However, an oscillator, which is not visible on the screen here, we had to hide it from you because we had to keep the rating safe for children. The oscillator is showing that the momentum with which it's rising is dissipating. That's an early warning sign that even though something is rising in the air, it's coming back down. It's the rate at which it's rising is slowing. So if I throw this pen up in the air, and right here, it looks like it was higher than just a moment ago because it was, but the rate at which it's rising is dissipating. And that means that, well, the momentum is falling and price might reverse. Now this is called Knoxville Divergence. Now, I named it Knoxville Divergence because I wrote this indicator while sitting in a coffee shop in Knoxville, Tennessee, while I was driving across the country and staying overnight at traders' houses. Do any of you want me to come over and stay overnight at your house? Maybe we could hang out and trade the next day. If that sounds interesting to you, raise your hand during the broadcast and we'll make that happen, maybe. I'd rather give away an iPad than sleep, somewhere in your house. But anyway, that's Knoxville Divergence. Now that indicator is free on my website, and when we're done with this video, I'll make sure you get a link to that indicator download below. So that Knoxville Divergence indicator is an early warning sign. It's not a guarantee, but it is a suggestion, a strongly worded suggestion. So if MT4 had a suggestion box, Knoxville Divergence would have input a suggestion that price should fall from there. Now, a few years ago, I taught a method where I would combine this divergence with a Fibonacci retracement. And I want to show you how these two things might work together. Now, divergence, once again, for those of you just joining us now, divergence is an early warning sign that price will reverse because price is moving in one direction. However, an oscillator or an indicator of momentum is moving in the opposite direction. So in this instance right here, price is moving up, but some kind of oscillator is moving down. Now, Knoxville Divergence uses the momentum indicator and also the relative strength index. So that's how Knoxville Divergence is created. For more on the origins of Knoxville Divergence, consult your favorite sacred texts. I'm just kidding, that's not actually true. Okay, so now a lot of you, I know a bunch of you are interested in Fibonacci. Some of you are interested in magic potions, Fibonacci, the Fibonacci circle fan of death, and other kinds of fancy pants indicators. Now, I have poo-pooed Fibonacci quite a bit in the past few years. In fact, just a few months ago, I made a video that was kind of like tongue-in-cheek, all about Fibonacci. When I was in London this last weekend speaking to a couple hundred traders live and then a few thousand traders online at the London Traders Conference, thank you to our sponsors Forest Park FX and FX Pro, when we were there, I caught up with Serge, who is trading the robot that uses Knoxville Divergence. And Serge said, hey man, sometimes I'm doing these discretionary trades where I add Fibonacci to Knoxville Divergence, and it's awesome. And I was like, whoa, that sounds really amazing. Where did you learn how to do that? And he says, oh, you taught it to me in a video or whatever a few years ago. And I thought, wow, it's amazing the things that we can't remember that we did. Anyway, what I'd like to do now is show you how you might combine divergence with Fibonacci and get some trade entries that I think are really high probability and pretty cool. All right, so here we go. I'm going to move the chart back just a little bit so it's a little bit easier to see. Are we out of the glare? Or are we right in it?
The glare is just behind you right there.
Okay, so there's no problem. So the glare is there in my hair. No, okay, so that's the glare. Now what I'm going to do, give me a minute here. I'm going to walk around. You're going to see some glare on the screen, and I'm going to draw a Fibonacci retracement. And I'm going to try to keep the microphone close enough so you can hear me. All right, so we're going to grab the Fibonacci tool right here, and I think that's going to work. We're going to start with the low down there, and we're going to draw it to the top of where the divergence appeared. So is the glare interrupting any of this, Nate? Okay.
No, just don't go much further to your left.
Just don't. All right, so what we did was we noticed Knoxville Divergence up here. Now remember, everything that I'm doing is like not meant to be exact. Like it's all horseshoes and hand grenades. Close is close enough. All right, so we started at the low, the most recent low before the divergence appeared, right over in this area. And then we ended it right up here on these bars or candles in the area of Knoxville Divergence. And then the Fibonacci sequences are as follow: the 23, the 38, the 50, the 61.8, the 100, and then the 161, and so forth. Wow, I love it when this thing works. I love it when all these buttons work. Okay, so here we go. Let's take a look at how one might go about taking a discretionary trade or setting up a discretionary trade. So we've got our retracement levels. So we might wait until the 23 is broken. And in this instance, we might sell when the 23 is broken and target the 38, the 50, the 61, the 100, and then even the 161 Fibonacci level. Now, why would we do this and how would we do this? Well, one way that we could do this is we could start a sell position here. We could take some of our profit when it hits the 38. That's a super high probability trade. That's going to be maybe a smaller amount of profit, but it's going to be a super high probability trade. Then we could keep some of the position open for the 50% retracement, close some of our position at that point, Then we could wait for the 61.8 retracement level, take some of our profit at that point, and keep moving our stop down as we go. Now, eventually you're going to get, bounced out of that trade. And not every time are we going to get down all the way to the lowest Fibonacci levels, all right? It's not going to happen. And sometimes it's just going to break above the top of the Fibonacci sequence, and it's not even going to break down below the 23. Now, you might ask, well, what happens if we draw the Knoxville Divergence? We draw the Fibonacci when the first Knoxville Divergence appears right there, and then it moves. Well, as long as we haven't broken the 23% retracement, we just keep moving the Fibonacci sequence higher and higher as the divergences are formed. And, it's discretionary trading, so you might have to redraw something, you might have to get out your slide rule or your abacus or whatever else. So now what I want to try to do, I'm going to try to get this Fibonacci. Oh, there we go. Come on, Fibonacci. Don't let me down. We're going to delete. Okay, we deleted that. Now, what I'm going to do here, I have no idea if this is going to work or not. Nate knows we've been fixing cameras all morning, so I basically had no time to prepare for any of this in advance, really. So this is a daily chart. So see, we're going to play around here and see if we can. There we go. Here's a daily chart. And it doesn't really matter where we find ourselves. Let's just take it right here. And I'm going to come back around over on this side, and I'm going to draw a Fibonacci sequence that goes from this low to this high. We're going to do it again. And this is the British pound Japanese yen, but it could be really anything. Now, once again, this is just close enough. And I didn't really draw it perfectly or anything like that. Oh, come on. Oh, there we go, Nate. So now our super high-tech monitor that cost $12 million decides that it's, had a bad day or it's had enough. All right, so we've drawn the sequence from the low here to the high here. Now, what we want to do is we want to trade this move on the break through these levels. So once it breaks the 23, we want to sell it. Once it breaks the 38, we want to sell it. And you can see that these levels act as a super high probability stopping point for price. And Nate, I mean, you don't know Nate from a sack of coal probably, but Nate, we didn't look at this chart before we started. We just have been sort of getting everything ready. And time again, this seems to play out reasonably effectively. And the highest probability setup is once the divergence appears from the 23 to the 38, that move seems to be super high probability. Now, for those of you that trade with maybe the robot, the Finch robot that is based on Knoxville Divergence, this kind of sequence from longer term charts like the 4-hour and the daily, this kind of setup is a great way to help your Finch trades get out of trouble, because you can look at a longer term chart, you get a super high probability trade with a nice chunk of profit from a longer term chart, and you can use that profit to possibly pay off or remove a bad trade. So I want to look at a different currency pair here, and it's going to take me a minute. So Nate, what's going on? Just funny comments. So Nate, let us know some of the stuff that's coming through while I redraw this.
Well, everybody is commenting that you look rather buff today. I'm wondering if you work out.
Well, that's very nice. So all of your fitness is going to happen in the kitchen. So I do a lot of rolls, like cinnamon rolls, and I don't know any other. All right, let's just. Does anybody want to suggest a currency pair? Suggest a currency pair here. Just let us know any currency pair you want to look at. We'll check it out. And Nate will just take someone's recommendation here. So all those comments take a minute to come through. And while we're waiting for those comments to come through, I'm going to try to fix this. There we go. It's working again. Did we get any suggestions?
Not yet.
All right.
Well, somebody said you have nice forearms.
I have nice. Thank you very much. I appreciate that. I've been working on my forearms a whole life. All right. So I think I heard someone.
New Zealand dollar and U.S. dollar?
New Zealand, U.S.
Or Euro, U.S.
All right. So this is the New Zealand, U.S. And we'll just scroll back in time, as Huey Lewis taught us to do. There we go. Whoa, this is going to be freaky. All right, so here we go. This is a great example. Who suggested that?
This was.
All right, let's write down that name. This is a great suggestion. This is leading to a really nice setup. So here we have a Knoxville Divergence right here. So that, who was that?
Russell.
Russell. So we're going to draw our Fibonacci sequence right there because that's where the first divergence showed up. And you're like, well, what happens now? Well, if it doesn't break the 23 level and start moving up, then we don't care. We'll just keep drawing it lower. Let's see if we can do this. All right, this is going to be interesting, Nate. We'll delete it. And we'll draw it all the way down to the bottom there. Now we've got a fib level. And now we're gonna set up some trades. So now we've bottomed out here and we've broken the 23 and we rose to the 38. And then we come back down, but then we break over here. Now there's going to be some glare here. We break the 33 and we don't get quite up to the 50. So we don't make it all the way up quite to the 50 and then we come back down. Now as long as we have a trailing stop through this whole process, we're perfectly fine. But it doesn't remove any of what we said earlier. This initial break of the 23 is a super high probability trade up to the 38, and that moves from 65.12 to 67.46. That's like a 225 pip move in between those fib levels. That's absolutely brilliant. And for those of you that have been, for example, stuck in a garbage New Zealand dollar Finch trade, that's a pretty great way to sort of try to solve the problem. It's just one way to do it. You could use it on a daily chart. You could use it on a 4-hour chart. You could use it on a 1-hour chart, although I like it from these higher time frame chart levels. And so I'm going to maybe move this stuff around or draw a little bit more, or maybe pull up the whiteboard for a minute and just make some final recommendations and make some final thoughts here. But I'd love to hear your comments and questions as they're coming through. Now, down below, I will link to, there's a couple things that you got to know. I will link to the indicator download for those of you that don't have Knoxville Divergence for MetaTrader 4. I will make a link to that indicator download. That's absolutely free. Now, for those of you that want to trade this Knoxville Divergence automatically with a robot, I'll put a link there as well. The robots are now, within a couple of hours or the next day or two, they're going to go on sale for $500, but they're still on the website for $200. And like I've said, I've warned everybody recently a ton. That's not like a joke or whatever. I'm just trying to work with fewer people and try to help those people have a better experience. So I'll link to the robots below this YouTube video also. If you already have them, then congratulations, you got them for a great price. But I'll give you the discount if you click the link below there. Okay, let's remove this, pull up the whiteboard, and then I'm going to make some final notes, and we will announce a winner. Okay, so number one. Diverge. So that's just how, like on the streets when I was growing up, that's how we said divergence. We said, hey, there's some diverge. Divergence is the disagreement between price moving in one direction, hi, this is Harry from One Direction, and momentum oscillators moving in a different direction. And it appears as lines above or below candles. What we did today was I know a lot of you don't speak Italian, but Fibonacci is Italian for cinnamon roll. I don't know if a lot of you knew that. We draw a fib retracement after the divergence, and those two things in combination with each other make for a delicious experience. Now, I hope this was helpful. I hope you had a great time, and if you did, like the video, subscribe to the channel, let us know how you're feeling. If you didn't like this video, my name is, I was going to name one of my competitors in the trading education business, although we don't really have competitors, right? So if you like this video, my name is Rob Booker. Subscribe to the channel, like the video. And Nate, let's announce the winner. Why don't we, did you have a winner written down?
I've got one written down.
Okay, Nate's got a winner written down. I'm going to write this name as Nate says it. So just say it really slowly. Okay, Barack Obama?
Uh-huh.
That's right, Barack Obama. You're the new winner of an iPad. No, what's it?
Brian.
And do we know Brian's last name?
Foster.
Brian Foster. Okay, Brian Foster. Find me. You can email me at my email. Just reply to any email you've ever received from me. You could message me on Facebook. You just go to Rob Booker Trader on Facebook and send us a message. Let us know that you were the winner. Give us your address, and we will send you an iPad via Amazon. It'll be there in the next 24 to 48 hours. I'm going to come back tomorrow, and I'm going to show you the robot that trades all these things auto-magically. So I can't wait for you to come back. If you're watching on YouTube, this is probably part of a playlist. If you're watching this on the day I've created this video and you're watching live, we'll be back tomorrow. I'm Rob Booker. Thank you so much for being here, and we'll see you very soon. I thought Brian, what did Brian say that was so awesome?
He had a funny comment about the Knoxville being a country song. Knoxville Divergence took my baby away.
Knoxville Divergence took my baby. That's pretty great. Yeah, that is deserving of that is definitely deserving.